Hi traders, good morning, good afternoon, good evening. Welcome to another session for learning. In today's video, we are going to learn a special strategy which is only designed for people who are working, and this is the most safest strategy one can do if you are having no time to actually watch charts. You have to form a view basis the market and the charts just a day before, and then the moment the market opens you can play around with this strategy. Just place your order and leave it for the end of the day. So let's get started. First, we are going to analyze Bank Nifty on a monthly time frame. As you can see, I have Bank Nifty monthly chart here. So what do we see here, guys? We have a great bullish setup. So this entire bar is taken out, and now this high is likely to be broken and the market can rally from here, so which is a very good sign, and it is still going up. So but this is on a monthly time frame. You need to understand that different time frames tell us different story, so we need to analyze on multiple time frames. On a daily time frame, or let's first go to a weekly time frame. First we did monthly and then we now go to weekly time frame. Weekly time frame, it's given this setup and it has moved up. So same principles apply everywhere. This kind of setup, the next bar will be like this, and this is likely to touch this week, and this is your major resistance, which is your 200 period moving average. Okay, whenever the price touches 200 period moving average, always there will be resistance initially. If the volume is too high, then it can take out the 200 period moving average, because this is, if you understand this is 200 days of the average price. The price has gone below that, so whenever the price comes here, people will start winding up their positions here, because they have been waiting all this fall, and the moment it touches here, they try to close those positions. That's the reason it falls from there. So I hope you understood the logic here. So then we go to a daily time frame. Daily time frame, whoa, look at that chart. This candle, if somebody understands price action, this candle, they must have thought this is a reversal candle actually, but you need to look at the volume along with this. The volume has to be super high. If this kind of candle forms anywhere near the 200 period moving average, it should be towering like this at this level. Okay, only then you can expect the market will reverse from here and it will go down. So I had an eye on this and I had an eye on this, so I made a position bullish towards the upside, and luckily this gave me a real good profit and the market moved in our favor within no time. Now let's go to a 3-minute time frame and analyze. Market opened here, immediately next candle it reversed, and it was holding the VWAP spot for some time, and after that it came towards the 200 period moving average. And these are the things you have to watch carefully. This has given an indication that it has gone down this, but the volumes are very low, so you can definitely expect a bounce from this. Always combine price with volume so that you can understand the complete picture. In olden days, people used to only look at the price and they used to look at the volume. That ticker trading used to be there only price and volume used to be there, and people used to keep watching price, volume, price, volume, price, volume. If they see the price is actually going down with a large difference and the volume is increasing, they would have shorted. If the price is going up with large difference, like if it is moving like good volume but the price is moving a little bit, then definitely they feel that there is something short is going to come up in the market. So that used to be the logic. So understand the relation between price and volume, it will definitely help you. So here it gave a good entry, and after it crossed VWAP, and then look at the run it has done. Usually remember on Friday, first day of the next series, this day is always trending day. Remember this. do not try to do any straddle or strangle on these days. You will end up in loss, because this is the first day of the week. Try to completely hedge your position or do butterfly directionally. Take a view whether it can go up or down. You will definitely get benefited. So here my view was upside, so I created a butterfly upside and it gave me a decent profit. So now today what I'm going to teach you is that one strategy which you can, I hope you have seen my butterfly video strategy. It is something similar to that, but the probability of success in this is much higher compared to our butterfly strategy. So without further delay, let me show you what I am trying to tell you. So let me do a reset of this and then start from scratch. So we have taken Bank Nifty. 15th October is the nearest expiry. Let's go to the option chain. So in option chain we are seeing that Bank Nifty is at 23,800. So this is the at the money strike. Okay, so now what do we do? Morning at around 9:40 you need to let the market settle, and then you should go and see what is the at the money strike, and you take that at the money strike. Assume that is 23,800. So you go 23,800, put, this is of 15th October, sell one lot, call, sell one lot. Okay, so now we have sold a straddle, okay, at the money straddle. Now what if the market starts shifting here, shifting there, and your MTM starts to go in negative big time, your profit is only maximum 20,000. All these questions will come, and the moment the market starts going up down, your BP will go high and you will definitely want to square off in loss. So how do we counter that without watching the charts? So there are two ways. I'll show you how. So here if you notice, the premium sold is 365 plus 438. So put up the calculator, say 365 plus 438, so 803. So now you add 23,800 plus 800. So what is the price? 24,600. Okay, so we go and see 24,600 call, which is at 146. So what are we doing? 24,600 call, we are going to buy. Okay, now this side is protected. Whatever happens, even if it moves here, your maximum loss is about 3,000 rupees. Okay, so now we do the same thing on the other side. So what do we do? 23,800 minus 800, simple, 23,000. So what do? We go and buy a 23,000 put. Okay guys, so look at this. So you have got a butterfly, same butterfly is what we do, but here you have sold a straddle. So the decay on the straddle will be much faster, because the market, Bank Nifty, is more volatile, up and down, up and down. If it stays in this range, you can get benefited from this. Your maximum profit is 13,000, maximum loss is about 6,000. And what is the range you're getting here? Let us calculate. So your range is about 23,252 minus 24,348. So there is a range of about 1096. So now you can say, what if the market moves more than 1,000? Then your risk is only this much. If it moves 1,500, 2,000 points, you're losing 6,299 that day. So this is your maximum loss which you can take even if you go wrong. So your technical analysis has to be really strong, and then take this. Now, is this the strategy safe? It is safe. But is the probability high? The probability may not be high for this. So what do we do to increase our probability? So now listen to this very carefully, what I'm going to show it to you. So the same setup, you have sold 15th October 23,800 call, 23,800 put, and bought a 24,600, 23,000 put. Why did we do that? Because we have got this total premium range and we have taken a range for that. So now to safeguard this further, what we can do is 24,600 call, instead of buying a 15th October, you go and buy a monthly. Okay, and the same thing, 23,000 put, also we are going to buy monthly. Okay, so now your butterfly become like this. What did we do? Let me repeat once again. You have sold this week's straddle at the money straddle 23,800, and this premium difference strikes you have bought for monthly as a protection. Okay, so now what did it change for us? But it is showing 18,000 as maximum loss and 16,000 as maximum profit. Okay, so now the probability is high. I'll show you how it is. So let's look at the range here. Your range 23,000, let's calculate it. So 23031 minus 24639, this is your range. So you have increased your range by 1600 points. So earlier setup, the range was 1000, here it is 1600 points. So you're getting a bigger range, so the probability of winning will be much higher. What will happen is, when the market starts to move here, move there, these premiums will erode faster and they will not be much of a spikes or drops compared to this on a monthly strikes. So these are pretty safe for you. So here, if you see your P&L graph, here it shows hardly 8 rupees, 9 rupees, 61 rupees, right? But intraday, when the movements happen, you keep watching this T plus 0 will change dramatically, and even if it moves this side, you will be in positive. Even if it moves this side, you will be positive. So this is one of the safest strategy you can try, and you can make money every day. But if still you are skeptical, you can definitely go back to our previous setup where you are selling the same strikes in the same expiry, so that your loss is visually limited. But here the probability is much higher. Trust me, this will do good for you. You can actually experiment it one lot and see. This is just one lot which we have done. Imagine you're doing, like, say 100 quantity here, 100 quantity here, 100 here, 100 here. Your profit is about 65,000 rupees, your loss is about 75,000 rupees. Now if I change this back to the same expiry, things will look much better for you on a visual front, but practically that will be more profitable. See this, you have maximum profit of 54,000 rupees if it doesn't move anywhere, and you have maximum loss of 25,000 rupees. So this can be a good strategy if you are expecting the market to be in this range, that is your 1000 point range, which is a small range for Bank Nifty, and there are only few days where that can happen. And average movement, see, open to close movement may not be very high in Bank Nifty, but you have to be patient to keep it holding till the end of the day. And try this on intraday and do it. For carrying it positional, you need to increase the range, choose the strikes little more farther than this, then it will be much more safer for you. Okay, I hope you have learned something new, guys, and this is something which nobody will teach you like this on YouTube. You can go and search, but the logic and explanation will not be right. So please do subscribe to my channel and learn with me and make money. So I will be happy if you are making money with these strategies. These are strategies which are very safe for you, and you have to spend a lot. People charge about 45 to 50k to teach you these kind of strategies. So please do respect that, and please do share and subscribe to my channel. And this is my channel. As you can see, we are still at this. We have close to about 80 plus videos in this channel, which you can go through, and every week I'm putting up a new video along with bank nifty analysis. Okay guys, thank you so much for watching and have a great weekend.